Ronnie.
Yes, sir.
Abassa. Good morning.
Good morning, Solomon.
You're looking good.
You look absolutely smashing yourself.
I know that. At some point,
Yes.
when we were exchanging the pleasantries,
Yes.
someone told me I look like a British man.
You look like a British man.
I won't tell you who.
Somebody lied. Well, ladies and gentlemen, one more time, you're absolutely welcome. I don't know how that complimenting session went. I saw some people complimenting a bank from a competing bank, and it was like, you guys are doing well that side. Say, yeah, also you guys that side. Seemed a bit uncomfortable, but it's all right to celebrate each other. I also noticed I said compliment 4 different people. Someone complimented one person 4 times. I'm not too sure what the agenda was there, but my name is Ronnie Havasa, and I'm honored to be your host today. But I'll not be working alone. I'll be working with the British man,
Solomon Chimbugwe, also known as Chimbugwe.
Chimbugwe. And without further ado, of prayer, and allow me invite our manager revenue collection. She's the Nalongo. She also dabbles as a pastor in her free time, and that's why she's befitting for this assignment. Let's put our hands together for Nalongo Businje Kelemensio as she comes to officially open up with a word of prayer. Thank you so much for that wonderful prayer. Solomon, what do we have next on our agenda?
The anthems. This is a national event. I must tell you that because we are here to talk about the role of financial institutions in the domestic revenue mobilization strategy. It doesn't get more national than that. So at this very point in time, I'll request all our distinguished delegates that are here with us to get on their feet, and we sing the national anthem and the East African anthem, and we shall use our voices.
Oh, wow. And I hope you are the choir master.
I could take on the challenge.
Super.
Oh, Uganda, we lay our future in thy hands. United thee for liberty, together we'll always stand.
This is why we
the East African anthem.
glorified
Ronnie,
through our work.
if you can.
So that
Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tulilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya. jumuiya yetu.
has raised him.
Thank you very much. Ladies and gentlemen, you now may be seated. We will not be asking you to stand up again unless it's of your own accord. One more time, you're all absolutely welcome to the 6th Annual Bankers Conference, and our theme is the role of financial institutions in the domestic revenue mobilization strategy. And in a special way, would like to first of all acknowledge all of you because all of you are VIPs. Thank you so much for honoring our invite, and I'll just ask you to clap for your neighbor in that regard. But in a special way, I'd like also to acknowledge our host for this event, who is the Commissioner Corporate Services, Mr. Richard Kalisa. Thank you so much. And of course, seated next to him is his sponsor. We have a host and we have a sponsor. So let's also give it up for the CG. Thank you so much. But I'll ask Solomon, you have a few people you'd like to acknowledge as well.
Yes, I would like to acknowledge a few people. You know, when people were greeting each other and exchanging pleasantries, there was an aroma. And I was asking myself, what is that? Then I figured it out. It was the aroma of currency. Shillings, dollars, rands. It was in the air. Then I realized I'm seated among royalty when it comes to the finance sector in this country. And
How I wish I had the way of capturing aroma and converting it into my wallet. Yes.
it is in the room. And guess what? We do have, in no particular order,
All right.
but I must say that we do have Ann Juko in the building, team lead Stanbic Bank.
Round of applause. Very welcome, Anne.
We also do have Housing Finance well represented. The CEO, Mr. Michael Mugabe, is in the building.
Welcome, Michael.
Exim Bank is in the building, well represented by the CEO, Mr. Henry Lugemwa.
Welcome.
We have EcoBank. The MD, Grace Mulisa, is in the building.
Welcome, Grace.
We have PSFU, the Chief Membership Officer, Mr. Francis Chisirinya, is in the building.
Honored to have you, Francis.
We have GT in the building, Mr. Rekam Sanri.
Very welcome, Sebo.
He's in the building. We do have the Director, Economic Affairs, the Ministry of Finance, Planning and Economic Development, Mr. Moses Kagwa, who always partners with URA in engagements such as these.
Thank
we
you
are
so
very
much,
glad to have him with us.
Mr. Kagwa.
Stanchart is represented, Bank of India is represented, Citibank is represented, and so many other banks. We shall keep on mentioning them as the conversations proceed. Over to you, Ronnie.
All right, and last but not least, as we get ready to jump straight into our agenda for the day, and I'm sure in your manuals that you have a copy of the program, which we intend to stick to in as much as is possible. Just to advise you, for Wi-Fi, the Wi-Fi password is Mestil 2023. If you should need to log on, look for Mestil Guest and log in as a guest. The password is Mestil 2023. And the last announcement, today for our polls, for our Q&A sessions, and also for our feedback survey form, we have a platform called Slido. And we're trying to embrace technology, as we believe many of you are doing the same. And so I'd like you, if you can, we have two options. One is for you to download the app on your device, and trust me, it's a wonderful app which you might find very useful. Or you can just use the web-based platform. So just go to your browser and type Slido. Slido is spelled S-L-I-D-O. Slido. And once you're in there, you'll just be requested for an access code, and that access code is right there. So you join at slido.com. The access code is 13050202. on that platform, we shall be doing our Q&A. We have a few questions, some poll questions, and at the end, that is where we shall also do our feedback form. Last but not least, if you feel like resting, our restrooms are just on the outside. Don't rest in peace. Please come back and join us, okay?
Ronnie,
Yes,
if
sir.
I may, we are still keeping in the tradition of technology. If you're the tweeting kind of executive, the tweeting CEO, we are running with the hashtag URA Bankers Conference 22. Feel free to share your ideas using that hashtag as well as we indulge in this very important engagement. We are also on Zoom. We are streaming on YouTube. We are streaming on Facebook Live. And these proceedings are being captured. So if you have some executives that should have been here, but they've not been able to come, you might want to share that link and you tell them that the proceedings are happening live. Please tune and watch me. We are also streaming the same on the URA blog. It's called the Taxman blog. Kindly feel free to use any one of those platforms and you share with your banking executives who have not been able to come with you today so that they're able to follow this very important discussion. Back to you, Ronnie.
Thank you so much, Solomon. I like what you did there. You said, if you are the tweeting kind of CEO. That is pressure, meaning if you don't tweet, we shall know you are not the tweeting kind. And I saw Anne jumping on her phone immediately. Clearly, she is the tweeting kind. Don't be left behind. Ladies and gentlemen, to give us the opening remarks for this Bankers Conference, let's put our hands together for the Commissioner, Corporate Services, our host, Mr. DJ. You can usher him here with a song. He's been known to have some dancing skills. Put your hands together for Mr. Richard Kalisa.
CRMs, and from the various partnering banks and telecom companies. The Executive Director, Private Sector Foundation, represented by the head of membership, members of URA Senior Management Team, distinguished guests, ladies and gentlemen in your respective capacities, you are welcome and good morning. Good morning. I think that's better. I thought as the hosting I served a good breakfast to soothe our voices. You are all welcome to this event. It is my singular honor and privilege to welcome you here to this URA 6 Annual Bankers Appreciation Conference. The catchword here is appreciation, that we appreciate you for the partnership. This is an annual convention that enables us to meet and discuss partnering issues affecting our partnership, identify new strategies, new developments, and the desired improvements to focus for the next period ahead. First of all, we thank the Lord for the enabling economic, social environment that has seen the opening fully of our economies, both internally and globally. And in that regard, we dedicate this day to the Lord for His mercies. The opening has made us converge here today for this important event as we plan on furthering our strategic partnership in this new calendar at URA and at your respective places of work. As URA, we are privileged to host you here today, our strategic partners, in the collection of government revenue. In this gathering, we have all the 24 partnering commercial banks, two institutions that we may call MDIs, the microfinance institutions. We have the two major telcos, that's MTN and Airtel, that are fully represented. And in that regard, I want to thank you. In addition, we have financial institutions, and the main regulator fully represented, that's the Bank of Uganda. The Bank of Uganda is represented virtually. We have full representation from the Ministry of Finance and representatives from the private sector. On my own behalf and on behalf of HRA, I would want to thank all of you for sparing your precious time to come and attend this important gathering or event, if we may call it so. As part of the HRA strategy, we are fully committed to engaging all our relevant partners and stakeholders to ensure that we strengthen our collaboration, understand expectations and experiences from each other's side or standpoint, obtain feedback from all of us here, share information as we strive to strengthen and harmonize our relationship. We also look forward to discussing relevant issues as well as new developments and improvements required for our growth and development in the respective areas that we serve and the mandates that we hold. Ladies and gentlemen, the theme for today's conference is the role of financial institutions in domestic revenue mobilization strategy, commonly abbreviated as DRMS. This could not have come at a better time than this. The fact that financial institutions interface with both existing and potential taxpayers presents a strategic position to contribute towards mobilizing government revenue. The scope of opportunities ranges from information sharing, client support, tax education, financial and business literacy and engagements, and enhancing a call for voluntary compliance among others and areas of collaboration. I wish to extend the appreciation to the respective management teams from all institutions represented here for partnering with URA in the drive of collecting national and government revenue. To that I request that we give our partners a standing applause. This has not only ensured the seamless accessibility of financial services, but also their continued sustainability. As our partners, you have increasingly extended financial services to the business and non-business communities, and you are also among our life taxpayers. But most importantly to note is that you also support and facilitate revenue collection for government at large. Let me conclude by encouraging all of us, and mainly you, our stakeholders, to continue riding with us in the drive to attain economic independence for our nation by performing all activities that are within your reach and mandate to improve revenue collection and mobilization. This will help us increase Uganda's tax to GDP ratio. I wish to emphasize that as URA, we are determined to work with you to exploit and tap all areas of mutual interest as we mobilize enough government revenue to deliver our country from economic independence. I'm confident that the discussions that will be held at this conference today and the conclusions that will emerge thereafter will provide an impetus for a positive way forward for our strategic growth and relationship. Last but not least, let me take this opportunity to thank all of you here, our partners, to thank the teams that organized and put together this event and function. And in my view, I can say that the beginning is so far good, and we look forward to putting together our efforts and make this time spent here a worthwhile one. I wish to take this opportunity to conclude my remarks by wishing you fruitful deliberations, but please take time to share as many contacts as you can as we get here, so that we build a stronger network base as we embark on a partnership that will build a strong revenue base for our country. I thank you and welcome you once again for God and my country.
For Mr. Richard Karisa, the Commissioner of Corporate Services, Uganda Revenue Authority. He is like the bridge between URA and the financial institutions, and we are very, very glad to have him with us. He was supposed to do this, but he left me on the podium, so with a lot of humility, let me take the honors to invite. In the past, they used to call him the Chief Collector, but now we refer to him as the Chief Revenue Mobilizer, the one and only Mr. John Rojani Musinguzi, the Commissioner General of Uganda Revenue Authority. It is said that he can dance. I want to take the DJ, but maybe next time. Thank you so much. Siji, the floor is yours.
Thank you, comrade. It's true, I dance. When the right time comes, we'll get on the dance floor. The representative of the Permanent Secretary, Ministry of Finance, distinguished captains of industry of the banking sector, the representative of the Bank of Uganda, and told the executive director in charge of bank supervision is with us tonight. Chairman of the Uganda Bankers Association, the executive secretary of Uganda Bankers Association, the honorable managing directors, executive directors, heads of operations.
We're here in an area in northern Mozambique, and we've been going from village to village. We've been speaking to...
Okay, that was a commercial break. The different leaders of the commercial banks present, the leaders of the telecom industry present, the executive director of the Private Sector Foundation, the different officials and leaders of the government entities present here, members of senior management of Uganda Revenue Authority, dear invited guests, ladies and gentlemen, good morning to you all. What a beautiful day today to see all the very important people that enable us to do this noble task of collecting revenue for national development, who are here with us today. Let me ask the staff of Uganda Revenue Authority to put our hands together and receive and welcome the different leaders of the banking sector that have joined us this morning. It is indeed an honor for me to see you this morning, and I thank you very sincerely for accepting our invitation and taking off time, your very busy schedules, to be with us this morning as we engage in the 6th URA Annual Bankers Conference. The conference today is aimed at further leveraging our partnership in improving government revenue collections for the realization of the domestic revenue mobilization objectives. Uganda's domestic revenue mobilization strategy is geared towards improving the revenue collections and increasing our tax to GDP to at least 18% by the financial year 2023-24. The role of the financial institutions in this strategy cannot be underestimated. We require collective effort and commitment from all of us in improving service delivery, client support, supporting business developments, industrialization, economic growth, as well as paying fair share of tax revenue to support government programs. So thank you so much, ladies and gentlemen, for the great work that you're already doing in developing the nation. You are our key partners in mobilizing revenue, but you also make a significant contribution of revenue through the different activities. So we definitely want to thank you for your contribution at the banking institutions in revenue support, but also in the activities of collecting revenue. We would also like to thank you for the strategic partnership in facilitating business through financial literacy, banking services, and offering payment platforms that enable taxpayers to honor their tax obligations. This is a vital component of our economic development. The economies world over have gone through major social and economic disruptions, and it has become eminent that we must find ways of supporting and helping businesses to stay afloat, and also mobilize revenue internally within nations to take care of their own needs with minimum support from external aid. As you all know, Uganda as a nation, we are currently only funding about 47% of our national budget, meaning that the 53% comes from borrowing internally and externally. Our tax to GDP is also still at 13%, which is the lowest in the region compared to the Sub-Saharan Africa tax to GDP ratio, which is at 16%. Research has shown us that Uganda can fully support and fund its national expenditure. We just need to double our effort as revenue collectors and our partners in the financial institutions to bring this reality home. Whereas our mission as URA is to mobilize enough revenue for national development, this journey we cannot travel alone. We have purpose to continuously engage our key stakeholders, especially the banking sector, so that together we can mobilize the citizens to rise up to this challenge of mobilizing enough revenue for national development. You are the vital link and an extension of the URA services to the taxpayer and the business community at large. We also believe that you have the power to win over taxpayers towards the path of compliance. It is therefore with me great joy that we have converged here to share insights guided by the theme of this year's conference, the role of the financial institutions in domestic revenue mobilization, which is in line with the URA core values which is in line with the URA core values and the mission and vision. This year's conference will discuss the contribution of financial institutions and the private sector towards improving government revenue collection, while giving insights on opportunities for improvement, especially in regard to compliance. On our part, As URA, we have repurposed to improve our service delivery, to boost compliance, and to be business enablers. A healthy business environment is a win-win for all of us, and it is from this environment that you will get more clients, and also government will collect more revenue for providing the much needed social services. To achieve this, we have come up with several compliance enhancement initiatives, and one of them is listening to our key stakeholders, yourselves, but also to our clients to understand their concerns, and together come up with smarter solutions that will make life easy for us and for our clients. We are also strengthening the use of technology to enrich the taxpayer's experience and revenue administration generally. For instance, we are using artificial intelligence and data analytics to enhance our efficiency in evidence-based decision-making. We continue to automate, update, and integrate key business processes. We have also implemented some business solutions like digital tracking solution and electronic physical receipting and invoicing solutions. We call upon our partners in the financial sector to embrace these technologies and to promote them to the larger community of taxpayers. All these are premised on our internal commitment to be more efficient and transparent as we do our work. We are always guided by the core values of patriotism, integrity, and professionalism. We commit to continue and improve our tax administration practices through the support of all the relevant partners. As earlier mentioned, you are our partners in this effort of securing Uganda's economic independence. Due to this strategic position that you occupy, our efforts without your participation cannot yield much. I trust that together, and most importantly, by the grace of God, we shall make it. Therefore, as I want to take this opportunity to call upon you for your continued collaboration and commitment and contribution towards this journey of economic independence. This conference, where we are at, we are going to discuss key pertinent issues and share feedback and identify opportunities and areas of improvement. And indeed, a good indicator that we're heading in the right direction of developing Uganda together. I wish all of you very constructive deliberations in this conference, and I look forward to the gains that will come out of this. I thank you for God and my country.
Thank you, thank you, thank you. A big round of applause, ladies and gentlemen. I think the message is clear. Together, we can do this and improve those percentages. 47% national budget, 13% tax to GDP ratio. We can do this together. And we are already doing this. And in fact, today one of the key things we're going to be doing is celebrating some of the banks that have been outstanding in particular competencies. And just to give you heads up as a way of forward announcing, tonight we're going to give out awards for the most compliant bank. We'll give out the award for the most innovative bank, and we shall give out an award for the best in client servicing. And so may the best bank win. There are 25 banks that were competing, and the academy sat down and looked through. So today we'll be giving out those 3 categories. There'll be a winner and a first runner-up. So help you God. Right about now, ladies and gentlemen, it's if you're following our program, we're about ready to have our keynote address. And so without further ado, allow me, on behalf of the Permanent Secretary of Treasury, let's put our hands together for the Assistant Director, Economics Affairs, Minister of Finance, Mr. Moses Kagwa. I'll ask the DJ again to give us some music. I don't know if he dances or he dances at the right time. I can see Anwar is saying let us escort him. I don't know. DJ, give it up for Mr. Kagwa. Yes, you might want to stand, give honor where honor is due. Mr. Kagwa, this is a sign that we're expecting a powerful keynote. Hashtag no pressure.
Okay, thank you so much. Distinguished guests, ladies and gentlemen, I want to start by conveying the apologies of the Permanent Secretary of Treasury who couldn't be here because he's attending a meeting on the pre-budget meeting of East Africa in Mombasa. So he would have loved to be here, but he couldn't make it. And I will start my remarks by giving some figures of our infrastructure requirements. Okay, not really requirements, but just to say that yesterday it was reported that UNRWA owes contractors 595 billion shillings. And this money attracts interest of 462 million shillings every day. So that would set us, I think, in the right tone for this. So it's my pleasure to welcome you to this 6th Annual Bankers Conference. And I'll have some thoughts on the role of financial institutions in the domestic revenue mobilization strategy. Tax mobilization is essential for 3 reasons. First, Uganda needs to mobilize resources for investments to achieve sustainable development objectives. Second, with increasing debt levels projected to exceed 50% of GDP this year, tax revenue mobilization is a strategy for fiscal consolidation. The third reason is that a substantial tax collection capacity helps to strengthen institutions and increase state capacity. Uganda has modest tax revenues as a percentage of GDP, yet public expenditures are quite high. The current resources that finance the budget are inadequate to meet the country's needs. To improve economic growth and reduce the dependence on borrowing for financing its infrastructure gaps in many areas such as education, health, electricity, roads and waterways, Uganda must mobilize resources domestically. Hence, a need for a strategy to raise domestic revenue. You may all recall that the domestic revenue mobilization strategy was a result of concerted collaborative efforts by the Ministry of Finance, Planning and Economic Development, Uganda Revenue Authority, development partners, the academia, civil society, and the business community, which includes the financial sector. The strategy brings increased transparency to the direction of the tax policy making and administration in Uganda over a 5-year planning period, and also strengthens the administrative effort to support tax collection. The implementation of the domestic revenue mobilization will enhance the stability and sustainability of public finances such that all private sector investors can have confidence in the route that government has mapped for the country. The overall objective of the tax strategies in the DRMS is to raise sufficient revenues to meet public expenditure needs. However, we are mindful that this has to be done in a way that supports business growth and consequently the growth and development of the economy as a whole. This will allow the tax revenues to come closer to the target of 18% of GDP over a period of 5 years. So, getting to the contribution of the banking sector, financial sector to tax revenue, and as a pillar for resource allocation, Uganda's financial sector is a necessity in economic development because it acts on economic growth through capital accumulation and improvement of productivity. Therefore, we ask the following question: what is the impact of the financial sector on revenue mobilization in Uganda? At the outset, I wish to postulate that financial development increases tax revenue mobilization. Broadly speaking, the financial sector has direct and indirect effects on tax revenue. The direct effects stems from the country's ability to tax the financial sector. The financial sector represents significant value added, employment, and potential tax revenues. Services offered by the financial sector improve URA's performance in collecting tax revenues. You all know that all our taxes are collected through banks, and the banks have given us this platform which we collect our money. Also, better access to financial services may facilitate the tax recovery and compliance by taxpayers. Therefore, the financial system aids in the tracking and recovery of taxes. Banks, insurance companies, and other financial institutions provide liquidity to companies and consumers by providing various payment systems essential for their money transactions. Financial institutions are used by companies and taxpayers to carry out their transactions. In turn, URA obtains precious information from those financial institutions, such as the income and assets of taxpayers. However, because of the size of the informal economy, which is estimated at 51%, this undermines the efforts to acquire more information for tax purposes from the broad spectrum of taxpayers. But what we have seen also is that when the bank deposits increase, not only in Uganda but in other countries, we have seen that more taxes have been collected. So I think when the bankers are playing this role of attracting deposits, they are not only doing it for themselves, they are also doing it for URA, because we have seen the correlation between deposits and taxes. The banking sector is also central to sustainable economic growth, not only because it contributes significantly to tax revenues, but it's also critical in linking savings and investments. Facilitating the savings and investment processes ensures that the rest of the economy is fully functional and resources are effectively allocated to the most productive ventures. Proper alignment of the resource allocation process stimulates economic growth and consequently contributes to improved domestic revenue mobilization efforts. The total amount of tax revenues from the banking sector are now over shillings 958 billion, and this number has grown significantly over the past 5 years, from about shillings 535.9 billion in 2016-2017 financial year. Although we have had adverse effects on the economy caused by the COVID-19 pandemic disruptions, the sector's contribution to domestic tax revenues has remained significantly high. An even deepened banking sector can contribute more in terms of providing employment to many young Ugandans ready to work. This will improve on the pay-as-you-earn contribution from the sector, which currently stand at shillings 337 billion. There is still potential for the banking sector to contribute more tax revenues directly and indirectly, since the sector helps government administer taxes such as the withholding tax. And bank deposits also act as a source of information for URA There are households that use financial instruments to spend, and the spending is observed by URA and taxed. In general, the efficient perception of people's income taxes is sometimes very complicated and seemingly impossible. Income is frequently received and spent in cash. The situation would worsen with an underutilized banking system where most tax revenues come from local and foreign companies. As CG has mentioned, our tax to GDP ratio is still low at about 13.5%, and we are trying to collect taxes from businesses and companies. The URA and the Ministry of Finance are designing measures through the Domestic Revenue Mobilization Strategy to improve collections. As we tighten on enforcement, the financial sector, which offers lower agency and monitoring costs, will help Uganda increase its optimal tax auditing probability on operating establishments, which will in turn generate a significantly higher ratio of tax revenue to GDP. In a similar vein, the development of bonds and the stocks market plays a crucial role in revenue mobilization. As such, the development of the financial system positively influences direct tax revenues. Financial sector also impacts on investment decisions, on productivity, and enhancement activities through two mechanisms. One, by assessing potential investors and investing in the most successful ones. Two, they may provide research, assessment, and supervisory support more efficiently and cost-effectively than individual investors or individuals. They are also equally able to mobilize and provide the appropriate financing to investors rather than to individuals. In sum, the assessment and screening of investors reduce the cost of investment in improving productivity and stimulates economic growth. As a result, economic growth would increase considerably, and URA would collect higher tax revenues. Likewise, the financial system facilitates exchange of goods and services, trade transactions, contributing to boosting the competitiveness of companies on the international markets. Consequently, the results in increasing exports and imports, and Uganda is able to generate higher tax revenues. Specifically, the positive effect of international trade on tax revenues is expressed through revenues generated from taxes on international trade and domestic tax revenues. Moreover, financial development may contribute to reducing a company's degree of tax evasion. For example, larger companies and those owned by foreign investors whose financial statements are reviewed by external auditors are less likely to escape taxes. Individuals and companies escaping taxes or irregularly operating tend to hide their income. Indeed, access to external credit is very costly for companies having greater tax avoidance practices. Therefore, the financial sector encourages more transparency of companies that depend increasingly on external financing and on loans generally. In addition, the continued development of the banking or the financial sector in general should positively influence the ability of government to raise more tax revenues. It is noteworthy that domestic revenue mobilization heavily depends on the level of development in the financial sector. This is because the sector heavily supports government's efforts. Most banks are gazetted as withholding tax agents and collect tax on behalf of government. In doing so, the banks support the government in addressing challenges of taxing the informal sector. As you all know, the spirit of Ugandans is entrepreneurial, and this is reflected in the many small and micro businesses that thrive in towns and villages. However, most of them exist outside the scope of the tax system and of the regulatory frameworks. It is practical to tax components of this business activity But if it is difficult to tax the business itself, and the banking sector has allowed the government to be able to operationalize that through the withholding tax system. As we continue to implement the domestic revenue mobilization strategy, the informal businesses can realize that there is merit in formalizing their businesses. For example, these businesses can get a tax credit for the amount of tax that they pay, and the smaller businesses can also claim the interest they pay on the loans as a deduction for corporate income tax purposes. This will eventually reduce the effective tax rates that such businesses face. All the efforts to help formalize the Ugandan economy are possible if the banking sector is working efficiently. And so we are happy with this partnership that we are talking about how to mobilize domestic resources. And of course, there is the digital era which is upon us now. The Ugandan economy stands to lose significant amounts of tax revenue if we do not strategically position ourselves to tax transactions that happen every minute. As earlier alluded to, if it's difficult to tax a particular segment of the economy, we need to revert to its complements. The banking sector complements the digital transactions, and our hope is that when we reach out to the bankers, they will support our efforts in taxing the digital economy. This will go a long way in improving our domestic revenue mobilization. The role of the banking sector in reaching the rural areas, notably rural financial markets, are effectively underdeveloped, which implies limited financing for agricultural investments. Through strengthened, deepened, and widely spread financial markets, which the banks dominate in this country, the banking sector can reach these difficult areas and provide credit, which should complement government's efforts. I want to laud the financial sector for the use of agency banking, where we have now reached more people than before, and this helps us also in tracking businesses that are formal, because a lot of businesses that get credit through this system eventually become formalized. So to effectively implement the domestic revenue mobilization strategy, the government will need support from the players in the private sector, and the financial sector has a critical role to play in this process. The roles of the banks is not only limited to helping government realize more revenue, but spreads to cover the overall allocation of resources to the most productive sectors. Effective resource allocation remains key because it stimulates growth within the economy, hence contributing immensely to domestic revenue mobilization. Thank you very much for listening to me.
A huge round of applause for Mr. Moses Kagwa. It's not easy to draw plans that progress the nation economically, and he's been doing it for years now. We appreciate you, and we honor your efforts, sir. More CEOs have joined us. We talked about the aroma earlier. It increased a bit, and I was made aware it was because Fabian Kasi was in the building, the CEO of Centennial Bank.
He has taken the aroma a notch higher.
A notch higher, indeed. I must tell you that we've also been joined by a few more delegated individuals, and it would be extremely unfair for me not to talk about them. One of them is Mr. Wilbrod Owo, the ED Uganda Bankers Association.
Round of applause.
In that capacity, he is the banker's banker.
Exactly.
And we are very honored to have him with us. He will also be gracing the panel a little later. We've also been joined by the EDKCB, Kenya Commercial Bank, Mr. Edgar Biama, all the way from abroad.
Oh, right next door.
We are privileged
Oh,
to have you with us. But our friends in the production are going to take us in the digital age, because the next address is going to come by way of Zoom. So we shall firmly put our eyes on the big screen, and we shall get to listen to the Director Bank Supervision at the Bank of Uganda.
And Solomon, as they get ready to do that, allow me just correct a small error. I erroneously invited Mr. Kagwa as the Assistant Director, Economic Affairs. He's actually the Acting Director. So apologies for that. But I will now go live on
Live
Zoom.
to the big screen, and we shall get to listen to the Director Bank Supervision. Mr. Director, the floor is yours.
Good morning, everyone. I just have a few slides that I would like to take us through to help me articulate my thoughts with regards to the theme for this morning, which is the role of financial institutions in the domestic revenue mobilization strategy of URA. Can we have the slides up? Hello, can I have the slides up? Okay. If we could go to the second slide, I thought I would begin by just saying a few things. Someone once said, David Dixon once said that there are three things that are certain in life: death, taxes, and lost data. But in hello, can you hear me? Hello. 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 If we could go to the slide, I thought that in trying to understand the role of the possible role of financial institutions within in the domestic revenue mobilization strategy, it's essential for one to understand taxes, income flows, and financial institutions and how they interact within the wider economy. In the slide that I have up, you will notice the connection between financial institutions, households, farms, and government. And notice one thing, that financial institutions do a couple of things for government. One, they extend credit to government. The taxes come from the farms and the households. But also, more importantly, uniquely for Uganda, is that currently the financial institutions more or less as collecting agents for the tax. Financial institutions, as the way the sector is structured today, is that they collect revenues on behalf of government. This is the tax payments that are made through the banks, but at the same time also mobilize excess within the economy, both from households and from farms, which funds are then made available to fund government activities, and in particular help fund the budget deficit through the purchase and sale and resale of government debt. So then the question is, if we understand, if we have a sense now in terms of the transfers and the income flows throughout the economy, if we go to the next slide, why pay taxes? There's a prevalent thought among some that, you know, instead of paying taxes, government should just print money. And the position of most central banks around the world is very clear on that one, is that in doing, if we were to take that approach, it would end up causing inflation, which then devalues cash in the pockets of individuals, devalues household incomes or savings, and devalues the funds that are generated by the businesses, who again, in the case of Uganda, from your numbers, are one of the main sources of domestic taxes. So, to understand, we can move to the next slide. To understand the role of financial institutions within the domestic revenue mobilization strategy, it is integral that we understand why we pay taxes, and the perspective I have put up is from the perspective of financial institutions or from the financial sector. 4 key things that are mainly covered and provide the rationale for the payment of taxes. 1 is the management of public debt. 2 is the mitigation of the impact of macro risks. 3, it is support expenditure goals of government. And 4 is to manage the fiscal deficit. The role of financial institutions in this is, when you look at mitigating the impact of macro risks, trying to understand the rationale behind taxes, is with government receiving generating adequate funds or revenues, governments are in a better place to withstand external sector shocks, and we've just gone through one, COVID. 2, it provides a buffer against the unintended consequences and impact on the economy of geopolitical and any trade tensions. Again, that's something we're currently going through. And also, significant government revenues or government collections also mitigating the impacts of rising interest rates. Remember, and you might ask, how rising interest rates, how does that tie in with tax collection? If we do not collect enough in terms of government revenues, government then comes to borrow from the public, which is where the managing of public debt is. When government borrows from the public, the rate at which government borrows, it becomes the floor at which pricing for private sector credit is at. If government is borrowing is issuing 5-year treasury bonds and is paying coupons of 14 or 15%, say 14%, it means that when the private sector goes to the same financial institutions or the same financial sector to borrow money, the floor, the opportunity cost of those funds starts at 14. This is irrespective of the actual cost of those funds to the financial institutions that have mobilized them and are making them available for government borrowing. On managing public debt, one of the key issues and an indicator that is widely touted and discussed is maintaining sustainable debt to GDP ratio. But also, more importantly, the amount of revenues collected it helps define the ability for governments to repay any debts that it borrows. So when you look at managing public debt, there are 3 aspects you look at: sustainable GDP, debt to GDP ratios, what the debt service coverage ratio is. In other words, what proportion of your government revenues are applied to the repayment of debt, and also the management of domestic arrears to the private sector, which is something that's kind of unique to our economy. On managing fiscal deficit, it's about the revenues that are generated help to match revenue to expenditure, or at least ensure fiscal discipline. And also more important, it's helped to meet revenue targets set by the government and the National Revenue Service, in this case, Uganda Revenue Authority. And in reading from your domestic revenue mobilization strategy, and I think something was done earlier on by the Commissioner General, the DRMS talks of a 16 to 18% range. The Commissioner General has indicated that they're looking at a minimum of 18%. But for this to be done, people must pay the taxes, and taxes are based, at least the current system that we have today, we're doing the mobilization of these taxes through the financial system. And then lastly, of course, the rationale behind the payment of taxes, supporting expenditure goals of government. And that's for covering various areas: healthcare, education, infrastructure, industrialization support, and most importantly, is security. If we go to the next one. So then, turning to the theme of today's discussion, or this morning's discussion. So then, how do financial institutions contribute to the DRMS? I'll posit a couple of theories on this one. Three ways that I believe the financial institutions can contribute towards the DRMS. One is when it comes to taxing the taxed economy. Looking at the way the current financial institution is structured in Uganda, we're increasingly seeing more and more transactions that normally were outside of the conventional financial system being reflected in the mobile money or ecosystem. So where the money in the mobile ecosystem is banked, or this is reflected on the balance sheets of banks somewhere. So there is a need perhaps for the financial institutions working with the revenue service, one, to understand these flows through the economy, going back to my earlier the earlier slide that I showed, to help in expanding the tax base. Because by your own acknowledgement within the DRMS is that there is the burden on the few who can be seen within the economy has been growing, and therefore which explains the significantly higher tax rates compared to our peers within the region. Second, like I said, the financial institutions currently are collection agents for the revenue, for government revenue. There should be a discussion or a conversation, and there's a possibility for financial institutions to do more than collection agents. In other words, what I'm calling a collection agent plus model. Allow me just to speak a bit more on this. If currently the financial institutions, as we in the current dispensation, are the main conduit for the collection of government taxes, is it not possible then that in providing other services or other banking services to their customers, some kind of tax advisory services could be included? I'll give a case in point. If a firm has an account in the bank and pays its taxes through the same bank, as a starting point, the bank could offer, say, to handle the payroll, manage the payroll for the financial institution or for the firm. But in so doing, the bank then becomes responsible for remitting payee and any other payroll taxes to the revenue service on behalf of the firm. That can be extended even further. If the bank is providing, say, perhaps export financing, it would also then be able to provide for the collection at source or deduction at source of any export-related taxes or any import-related taxes for which it's financing the farm business. Second would be on information sharing. Now, Commissioner General, I hope you will not feel very bad when I say this, but some time back there was this directive issued by URA, which I believe is, I don't know if it's the status of that one, where you were directing financial institutions to share the data of all their customers with you. I think while that approach is not would not be very helpful if the support of financial institutions is being sought. I think rather it is for having the financial institutions and the wider financial sector agreeing on certain information sharing protocols so that one, you can start tracking illicit financial flows within the financial system, because those are payments for which on which taxes are not being paid. The acting director of economic affairs mentioned how certain firms that are reliant upon external financing sometimes or are suspected to be potentially hiding their tax activities from the revenue service. Now, if they are conducting their business through banks, banks file something called suspicious transaction reports, which in being shared sometimes with the revenue service can help point the revenue service to where potential illicit flows are within the system, so that you are then able to apply and collect any due taxes on those financial flows. Two, on tax reporting. Again, I do not see this I didn't see this when reading the DRMS, but I think there's a real opportunity here for financial institutions working with the revenue service to agree on perhaps helping some of their clients with things like tax reporting, both directly to the revenue service and also for them to ensure that their clients are compliant with all the various laws operating in the country. Three, fraud minimization. Increasingly, we are seeing a number of frauds being attempted, or at least attempts being made to perpetrate frauds within the banking system or within the financial system. Again, if there is information sharing between the revenue service and the financial institutions, because most of these frauds are either proceeds of either illegal activities or frauds that are reflecting of funds that are untaxed, that would enable that kind of information sharing is what I think it would be a potential area for cooperation or between the financial institutions and the revenue service in helping to achieve the various objectives and goals of the DRMS. And lastly, there should be a consideration for system integration between the revenue service and the financial system institutions. I do believe there is one at the moment for the ability to collect taxes, but if the idea of having financial institutions be more than just collection agents, the collection agent plus model, then some integration on a machine-to-machine between machine-to-machine between the revenue service systems and the financial institution bank systems would enable for greater sharing of information, because one of the key ways that the revenue service does collect taxes is your ability to collect taxes is a function of the kind of the quality, timeliness, and granularity of the information you have about the various taxpayer activities within the economy. Thirdly, the third area is on tax policy implementation. Outside of like systems interoperability, and something that's also acknowledged within the DRMS, is that from a tax collection and a revenue raising perspective, there has been a tendency for us to be short-sighted or to focus on the short term. Within your own DRMS, again, there was a concession to the fact that when you have revenue targets, which is not a bad thing, but when revenue targets are more important, especially short-term revenue targets are more important in the tax collection effort, other than taking a long-term perspective on tax collection, it tends to create distortions with the wider economy, but in particular in the functioning of the financial sector. And I'll give an example. We notice, and this has been the history throughout, that every year there is adjustment on existing taxes, an increment, rarely a decrement, but normally it's an increment to some other slight adjustment to how the taxes are being computed or collected. But these short-term changes to the tax code make the tax code very complicated to understand. Perhaps, and this is where the role of the financial institutions, the financial sector can be, that in sitting with the Revenue Service and the policymakers at the ministry, we could have a conversation in terms of looking at a long-term perspective for tax collection. So if you're going to make changes, say, to the income tax code, it should not just be for this year and then say, you know, wait and see what happens with the year and make other changes the following year. Have a five-year plan in terms of where you want income taxes to go and what kind of rates, and then have that as an overarching objective for which then progress in achieving is then assessed, as opposed to having a 1 year, 12-month cycle for changes to taxes. The advantage is when you have a longer term perspective to how you collect taxes or plan for tax collection over the tax policy, it makes the investment decisions of firms who are the main providers of the government revenue a bit more, introduces a more certainty in terms of the investment decision, because they have a longer horizon in which to plan on for their compliance with the tax code. And lastly, under tax policy implementation, the financial institutions, the wider financial sector, can help the Revenue Service, in this case URA, and the policy planners, tax policy planners, on clearly identifying and managing the unintended consequences of some of these changes to the tax code that we make. So, in a summary, since I don't have too much time, I think in response to today's theme, those are the three areas where, in my reading, both an understanding of the domestic revenue mobilization strategy and looking at the functioning of financial institutions within the wider financial sector, these are the three areas where we should all begin to have conversations in helping achieve the very noble and necessary objectives laid out in the DRMS. Thank you, ladies and gentlemen.
I believe we can do better than that, even though he's not with us here physically. He is online, and I'm sure he has certainly done justice to his presentation. Ladies and gentlemen, as we move on, we have our second presentation, and this should have been done by the CEO of Stanbic Bank, Madam Anjuko. Batches. Yeah, that's not me. She's given apologies. Her entire board is here in the country waiting for her, but at least she honored us with her presence. She honored our invite. However, she had to leave. But to represent her is someone who is also equal to the task. And I'll ask us just to put our hands together for the CFO of Stanbic Bank, Uganda, as he comes to give us the remarks on behalf of his CEO. Let's put our hands together.
Commissioner General, the representative of the Permanent Secretary, Ministry of Finance, my colleagues, bankers, distinguished guests, good morning. The first time I came to Uganda and to visit Stanbic, I was told that URA was the neighbor. And I said, this is a very good relationship between a taxpayer and a taxman. They have since left. I'm not sure whether the relationship became a little bit too cozy. But I do hope that the relationship would continue to grow, and we applaud the collaboration that we've had so far. Now, I would want to make a few remarks, and I did have a presentation. I'm not sure if that is that can be put through. So I'll talk about mainly three things. The first thing I'll talk about is where are we at in supporting the URA and the government of Uganda in mobilizing tax revenues. I'll then talk about where do we think the opportunities lie. And then lastly, I'll just shed a view around what we see as our future in terms of revenue collections going forward. So in our own perspective, if we look at what has anchored mobilization of tax revenue, digitization has been a key anchor. And our statistics do show that we have moved to about 86% of revenues collected on behalf of the URA and on behalf of government, to about 86% of that being collected digitally. There are several things that we have done as an organization in enhancing this. One is enabling collaboration between the mobile telco companies and ourselves in the banking industry to ensure that we can actually pay taxes through mobile. We have done a little bit of integration with our regulators to ensure that we create convenience for our clients in paying taxes. We've also looked at how we reduce the cost of transactions. And one of our signature projects, FlexiPay, being an area where we have reduced the cost of our clients doing payments, and therefore ensuring even the low income earners are able to meet their tax obligations without an additional banking cost. We do believe that there is a little bit more infrastructure that we can continue building on, aligned to some of the government projects, some of them being the parish model that we are looking at to try and support the government in ensuring that the tax component and the revenue and the value conversation is built into what we do as a collaborating partner. Can move to the next slide. So then, if you then look at the conversation around where do we see the growth, and we do believe that domestic tax revenue mobilization would also be dependent on our ability to support the winners of today and to also anchor the winners of tomorrow, creating capacity for the winners of tomorrow. And we can see that wholesale and trade are actually quite key developing contributors of tax revenue over the period. But we also do note that agriculture is a key anchor in this economy, but we've seen that there are a lot of low revenue, low transactional volumes there, and therefore the tax collection piece there would be high volume, but in low quantums. So that would be an area where we would want to focus on by digitizing ecosystems within that, creating a lot more financial inclusion in the space of agriculture, creating financial inclusion in the space of transport, creating financial inclusion in the space of trade. And we do believe that the role of financial institutions and Stanbic Bank is to say, if we then digitize these processes, we are creating avenues for data, avenues that enable us to support and get informed support for some of these sectors, and therefore broadening the tax base through financial inclusion. Next slide. So, if we then paint the picture of what do we see, I think the agenda of digital revenue, domestic revenue mobilization is key, but it also requires collaboration. It requires collaboration within the banking industry. It requires collaboration within our regulators. It requires collaboration with other industries. And a lot of gains have been made in ensuring that there is collaboration, especially with the telecommunication industries. We do believe that the agency model in the banking industry will play a big role in interoperability. We believe there's still room through regulation and through technology that we can do more as a banking sector to create interoperability and therefore ensure convenience for our clients in executing their tax obligations. The future looks quite bright, and we are actually positioned as an organization to partner with the URA, to partner with the government, to create more avenues to expand our tax base. One of the areas we see is expanding financial access for our clients. That is key for us. We will anchor ourselves in trying to build data that informs the needs of our clients, and therefore ensuring that these small sectors of the economy and economies that are important to this country continues to expand, and therefore widening the base of Uganda. We also do believe that we have an immense opportunity to capacity build, and our structure has been reorganized to ensure that we build capacity through some of our subsidiary entities in creating capacity for technology, in creating capacity for knowledge and good governance to ensure that we continue to improve tax compliance. Before I conclude my remarks, I would want to applaud the URA. Some of the things that we have seen that have really helped in ensuring that we continue to mobilize revenue for Uganda. One is collaboration. I think the fact that we are able to be hosted here and have conversations on how we can better mobilize revenue for Uganda is a key indicator of an intent to collaborate more with the regulator and with the partners within the industry. Second is an area around alternative dispute resolution. And I think in any relationship, there are bound to be disputes. And the proactive nature in which we look at procedures in order for us to try and resolve these disputes much faster, to create tax certainty, has been a key contributor in ensuring tax compliance across the industry. And then third is digitization. I do recall sometime in 2017, pre-COVID, we had invited the URA to a Standard Bank sponsored conference on tax. And what was quite proud and pleasing for us is the extent to which the Uganda Revenue Authority has advanced in its tax digitization technology. One that is quite key that I do see quite evident in this economy is IFRIS. It has ensured that there is specific tax certainty and ease in compliance, both from a trade point of view and also from a tax reporting point of view. There would be areas where we would collaborate more, and I do think an engagement around how we think about dispute resolutions, especially on the areas of agency notices, are areas we can improve, so that we can try and make sure that we improve tax certainty and as much as possible ensure compliance going forward. Colleagues, regulators and industry partners, I would want to stop there. Once again, apologies from Anne. She has to attend a board meeting that couldn't be moved. I would also just want to conclude by recognizing some of my team members who are with me. So if I can ask some of my team members to just raise their hands. We are part of a bigger team. and they are here to give me what I would call moral support. Thank you very much.
I think we come for him until he takes his seat. Thank you so much, Mr. Abraham Makutwa. And a beautiful presentation he's given on the role of commercial banks in support of revenue mobilization and collection. And I can categorically say the reason URA shifted offices has nothing whatsoever to do with the relationship. At least in your presentation, worry not. I think there's a plot of land next to the new office. Maybe you can consider purchasing it just to, make collection easier. We talk to you past the window. But ladies and gentlemen, right now we're going to get ready to get into our panel discussion, and I'll be inviting Solomon, my co-MC, to come and do us the honors, one of introducing our panelists, and two, just taking us through that quick panel discussion. So Solomon, over to you, sir. It is you.
But I'm hoping it's not me. Oh, the mic is working. Thank you so much, Ronnie. Yes, the juicy part is now, where we get to dig deep into the discussion of the role, courtesy of three experts, very seasoned, with almost more than half a century of experience in their professions. Without further ado, I'll request the production team to put their profiles up, and I'll be reading out bits of their profile as they take to the stage. And of course, the very first one to go to the stage is a man who is synonymous with the Private Sector Foundation, Uganda. He has served the entity in of capacities. Currently, he is representing as the Chief Membership Officer. And we are very glad to have him with us. He's going to be tackling from the private sector angle the role of financial institutions in domestic revenue mobilization. It's a fruitful, welcome discussion that we are looking forward to. And if the DJ can play something light that can usher him to the podium, we shall be very, very glad. Very, very glad. Of course, the next panelist that we are going to have with us is a lady who is, if I may, the Chief Domestic Revenue Mobilization Architect, because she's directly involved with that particular element at URA. The one and only Commissioner Domestic Taxes, Sarah M. Chelangat. She's seasoned. She was first a tax lady, if I may. Then she went into the private space, built a niche for herself. Then God, this was the will of God, called her back home. And now she's back serving as the Commissioner of Domestic Taxes, and she'll be sharing with us specific elements of the DRMS from a collector's perspective. The DJ is not working with me. I really wanted them to take to the podium energetically, majestically. The DJ finally did it. Thank you so much. The next panel that we are going to have with us is Mr. Wilbrod Owor. He's the Executive Secretary of Uganda Bankers Association, and we are talking about a quarter of the century working experience spanning across multiple sectors of the economy. That is including manufacturing, trade, commerce, e-commerce, international development, the NGO world, consulting, and so much more. He'll be tackling very specific issues, and of course, I'm going to take the honors of having this conversation with him. I'll use that particular song to make my way over there so that we are able to have this conversation. This conversation starts with something that happened earlier this week. Must have been Monday. I happened to work with URA, specifically handling the digital communication platforms, and I'm always having direct conversations with taxpayers. And on Monday, there's a lady who talked about an issue that I found very pertinent concerning the number of banks that have synchronized their systems enough with URA. And she was saying, how is it possible that with all the banks that we have in the country currently, we have only about 3 banks that have synchronized enough to give us the facility of Visa payments by way of POS when it comes to tax. It was a long conversation, as you can imagine. But I handled it very well. But today we are lucky that we are going to be having such discussions and so much more with the experts that we have with us. And we are going to be flying from one expert to another. But the theme is really about the role of the different players in the revenue mobilization strategy, specifically players in the financial sector. And definitely I'll start with the one who came back home, Sarah.
Maybe Solomon, sorry, just to cut you short. Just so that, as a reminder, we have Slido.com, which is where we're going to be participating. If you have a question or a comment, like we said, you can either go to your Apple Store or your Play Store, download the app, or just go to your URL and type in Slido.com. It will preempt you to give an access code, which is the number right there, 13050202. Question, any comment, if you choose to be anonymous, that is your call, and then we shall be picking the questions and handling them later. Thank you. Solomon.
Thank you so much for the Slido alert. I'll use this opportunity also to remind the tweeting executives that tweeting is completely doable at this forum. Yes. Sarah, good morning once again. We are going to dive deeper into improving tax compliance in the informal sector, a group that has given Uganda very unique challenges. The money is there in plenty. The money is not clearly visible. But here we are, and we have a task of onboarding as much as possible that particular informal sector. And the question in here is, how can our friends that we are dining with this morning in the banking sector, how can they help us promote and increase tax compliance in that particular category of Ugandans?
Thank you so much, and good morning to all of you. Just to welcome you once again to this symposium. We are so grateful as URA to have you. You are very key to our domestic revenue mobilization. Before I went to the private sector, I was working in URA, still as a tax collector. But that time I remember we would have our cashiers waiting to get returns, manual returns from the banks at 5 p.m., at midday, at 3 p.m., and then we would do manual reconciliations. But now we just need to get the system report. It's really good to be having these digital enablers for business. The informal sector is still a very big challenge to government in revenue mobilization. And in our revenue efforts, we see the informal sector contributing still very small. And we also note that the financial services sector is really on the ground. If you go downtown to Chikubo, we find all these banks there. You will find our bank, Centenary Bank, Stanbic, all of them are down. You are taking services to your customers. So we feel as URA and as government that we can work together to onboard this informal sector into a tax-paying culture. If we are to move this tax to GDP ratio to 16 to 20, we just need everyone to pay a fair share of the tax. I liked what the Director Bank Supervision was saying, that there are only two things that are certain: tax collection, death, and what? There was a third one. Sorry? Lost data. Yeah, so you can imagine death. There is somebody who needed tax support. Just to give you this story, and so I told him that it was before he came to URA. Then when we asked somebody to run his ledger, he had about 18 million. He was an individual, 18 million to pay. So I asked him, you have this money to pay 8 million? Please arrange to pay this money. Then he says, no, I don't have that money. I am in employment. You know, employment is net-based. You just get your money after the taxman has withheld. So you don't even feel you have actually paid tax. So I tell him that, what about the other business that you have? Then he said, no, you say it is farming. So the informal sector, first and foremost, especially those in farming, feel that they shouldn't even pay tax. And those in business have very volumes of business. Many of them keep their money in the bank. Many of them even still keep money at home. But of course, what I appreciate is that many have appreciated the importance of keeping money in the bank, and we feel that banks as our partners can support us in onboarding these people into the tax net. We appreciate especially the system that banks use, the relationship management system. You enter into a banking hall, you will find a relationship person with a very nice smile. He's able to talk to you in your language of comfort. If it is Luganda or it's your mother tongue, it makes really that thing very easy. So number one, we think that if we can collaborate with these banks, and especially in the areas, and we have our representatives seated in those banking halls, so that when you are speaking to them in that local language, we can also tell them, Nyabo, there is also tax here to pay. They only know that the tax payable is KCCA trading license, that's the tax, and customs that you pay at importation. Domestic tax is something very, very difficult for them to comprehend. So it's becoming easier for us to sell tax as a service, because when you go countrywide, you see infrastructure, you see electricity going up to our villages, you see water, piped water going. So these people must appreciate that for government to give us these services, we must pay tax. So we also feel that the banks should be able to support us in requesting for either a tax registration number or a tax clearance certificate before that bank account is opened. That will go a long way. And then give us this information. And then the other one is maybe funds beyond a certain number. You want to be sure that this person also pays tax. We are trying to improve on the high net worth individual tax bracket to have them also pay tax. You find an informal person, a businessman, say in Masaka or in Gulu, importing goods 2 billion. This is still in the business is under his name and very informal. But this person doesn't pay tax. How can we support each other? If somebody is getting that type of loan for business, it means that there is profit and the taxman has a share of that profit. The other one is also supporting us in giving us information about some of these individuals. We really thank the banks for that support, and we think that this support can go a long way in onboarding. And then fourthly, trainings. We can do collaborations in terms of trainings, tax literacy campaigns, together with banks, so that we are saying the same. If you are going to open a business, you want to be also compliant. There is a businessman who called me from Barara. He's an individual trader. And he told me that, Sarah, you don't know what this agency notice will do to my bank. My bank knows me as somebody very, very compliant. So I was like, yeah, compliant with paying your monthly installments. Can you also be compliant with paying your taxes? So that we are able to synchronize. So we want the banks to support us as you communicate to these business clients, which are also our business clients. Let them comply with paying tax the same way they comply with paying taxes, with paying loans. Requests in flagging e-commerce transactions above a certain threshold, we can engage further on this. We can engage further on this, and also linking savings and investments, especially the Diamond Trust Bank in Kampala Road. We do a lot of stamp duty collections through that bank. But you recall that stamp duty is really a tax on investments, transfer, and there are so many informal sector players within that. We are also trying to streamline that by asking them to have tax identification numbers. So we can do a lot together in supporting each other to collect tax and to do awareness campaigns in this informal sector. Thank you so much.
Thank you so much, Sarah, for that submission. I'm going to stay with you for just a little bit more, because you touched a bit on the issue of sharing. Real friends, and URA and the banks are real friends. And the most important tenet about sharing is making available what belongs to you to the other party. Now, we know banks are represented in every corner of every township in this country, and that speaks to a very, very big clientele. The question in there is, how do you see the banks sharing a little bit more of their client base with URA, because URA is contending with the issue of expanding the market base, expanding the tax base. We want to have as many more taxpayers as possible, and the banks have inroads into this. How would you see this playing out? How would you like to see the banks helping URA tap a little bit more into their clientele?
Thank you. We appreciate, actually, the Director Banking Supervision was insinuating to that same issue. We also appreciate the fact that banks have an issue of confidentiality in terms of their client information, but we can share a lot together, because if we are together in this business, we can be able to support each other in each one of us having their mandate executed. So we talked about the sharing of information, very, very important. It's an issue that we can discuss further. Maybe when we open up this to the team, to the entire, we can be able to get ideas. How best can we share information on the taxpayers? How best can we bring on board this tax issue, the compliance of these taxpayers? Like I indicated, we want, on top, we have people who are really high net worth within the informal space. How can we have these people pay tax? How can we have even other taxpayers who may not be informal, are not complying, pay tax? We will need this information from the banks. We will need to see how best we can share this information. at the same time not making them very uncomfortable to give information that they feel may affect the confidentiality of their clients. We also think that if there is a way we can have a system linkage between the banks and the tax authority, we will be able to pick some of this information through the system. This should support us in tax compliance. Thank you.
Thank you so much, Sarah, for that. I turn to my left, and all I see is the banker's banker, Mr. Winwood. And of course, you might have some answers, especially when it comes to the issue of financial institutions and avenue to realization of the DRMS in Uganda. And the very first question I have for you is a question of synergies. How can banks facilitate the growth and increase of revenue mobilization? URA is interested in collecting more, and you have a role to play.
Thank you. Thank you. Thank you very much. Let me start by thanking URA for this session. I think this is a very strategic partnership and it comes a long way. We've had these annual conferences to share experiences. I think this particular one is more focused in terms of the domestic revenue mobilization strategy. And I say this with a lot of gratitude and humility because the banking sector, like last year's conference, I think the CG said 94% of the country's taxes are collected through the banking system. So that's by itself sheer contribution. But yes, indeed, and I think it's been ably said both by supervision, by the Director of Economic Affairs, the financial sector plays a very important role. Finance is like lifeblood, and the institutions that facilitate that therefore have a role to play, because not only is it a collection point or for custody, we finance transactions that either generate investment or trade from which taxes are collected. But the financial institutions have played an important role tracing that history. We've done a lot of integrations and digitization of service provision. Those interfaces have brought about efficiency. Those efficiencies bring more collections. And we continue to do that through our various e-platforms, and the process has to be continuous. I think something was also said about data available. What are the sectors that we lend to extensively? In terms of ranking, you find trade comes first. Then you find manufacturing, personal lending as very, very key sectors that drive growth, and real estate. Those are huge portfolios we lend to heavily, and by extension, extend services. There's a lot of talk about information sharing. It's a good thing. The mechanics, obviously, we have to be careful and delicate owing to data breach and confidentiality provisions. But like the EDS said, there are various forms of information that give you then insights, like I've just given you the lending portfolio as an important one. This tax collection debate is not only for URA, not only for financial institutions, because you can only collect what the economy can produce. Our economy is small. I mean, just looking at GDP for Uganda, I think it's what? Under $40 billion. Tanzania is around about 60. Kenya is $99 billion. So underlying there, the underlying conditions must be that together we must focus on growth of the economy, from which the tax base gets widened, and then we can collect more. And as we invest in infrastructure, we extend financial inclusion, extend points of presence like we have done. Today, we have over 20,000 agents spread across the country. Just 4 or 5 years ago, we had less than 1,000 branches. Today we have 20,000. and the targets are increasing. We have e-channels, digital, both phone, handheld devices, and through the internet. As we expand this, we have more data. Today we have 19.5 million accounts by the statistics of December. As we expand this, obviously it provides useful information against which collect taxes, but the underlying base around the economy is critical that we expand it. There is very good, and I'm sure Francis will talk about it, opportunity for us to support the region with numerous products, with food, and other investments against which tax can be generated. Again, that we are happy to see the business opportunities to expand lending, and I think we must form a structured approach approaching these markets. You get the government, the bankers, the insurers, so that there's a whole syndicate, a combination that then facilitates more business in those particular areas. But I think as financial institutions, that's been ably said by the Stanbic colleague, the EDS, that there are very many areas, and at UBA we have a tax work stream, part of the presentations that you saw. We have a tax work stream. We are happy. I know that Commissioner Chelengat has met some of them, and sometimes we are just discussing tax operational issues. We can then discuss specific strategies that not just increase collection, but increase the efficiency within which we operate as financial institutions. And UBA has 36 members beyond the tier 1 commercial banks. They are the microfinance and the MDIs. And because those 36 members literally represent 98% of the private sector credit through financial institutions, it provides a good opportunity for us to identify specific areas. Even if we have short-term goals and long-term and medium ones, there is a big chance that we can support this process.
Thank you so much for that powerful submission. There were insights in there that are mind blown. You talked about total clientele of 19.1 million account owners, and I was thinking about the minister as a collector, and I was doing the math, and I could see the future, and the future is bright. But aside from that, for every partnership, there should be something in it for either side of the partnership. And there are opportunities that are tangible has been able to tap into courtesy of this partnership with URA. And there are more opportunities that you envisage that could be further harnessed by this relationship between URA and the banks.
Absolutely. There are various tax categories. Of course, there's domestic tax, and then the externally generated taxes, customs, and so on. And so we can approach them in either. But the country is also investing a lot on infrastructure. As you can see, roads, oil and gas, energy. The banking sector, among the things we do for such large projects, when funding isn't sufficient, we do what we call syndication. We mobilize funding from other finance partners globally to facilitate the transaction take place.